You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Life and money, they go together like peas in a pod. They're just
I was going to say like Tom and Don.
Like Tom and Don. Yeah, hi, we're Tom and Don. That's Tom, I'm Don. And this is a show called Talking Real Money where guess what we do? I know, we talk about money, but only real stuff. We don't talk about counterfeiting. We try not to talk about Bitcoin because it's not really real. And we try to put things in their proper place on the shelves of your life.
We do talk about the scoundrels, though. And out to get you.
Because there's a lot of them. There really are a lot of people who will say anything, do anything for a buck. And we're going to talk in depth about one of those somebodies who's been a thorn in my side since the 1990s when I did my national show. It's just been a constant annoyance by this guy. He's like,
You think in all that time you take the thorn out, but I guess
I try to ignore it, and it sort of heals over again, and then you rub it wrong and it hurts. And it turns out that Tom rubbed the thorn in my side because he's watching TV.
I know, of all places.
And I've ignored the guy for years. Thanks for bringing him back up. Porter Stansberry.
I apologize. And, I finished Ozark, so I had to move on to a new serial.
Okay.
And my wife, being my wife, loves these unsolved mystery types of, she likes the murder channel, even though I tell her when she's watching it, you'll never get away with it. But still, so now we're on to unsolved mysteries.
Apparently in these unsolved mysteries, some people might be getting away with things.
Well, these are, I think they had one on aliens but this one, going along, guy in his 30s either was murdered or suicide back in Baltimore about 15 years ago. Then all of a sudden they say he worked at Stansberry.
Stansberry Research.
Yeah, I was like, you mean the investment guys? And so I was telling I paused it. Told I think I know these people. And yeah, because he's pretty well known. The guy who ran not the guy who sadly lost his life, but the guy who runs Stansberry Research and is the head writer, bottle wash, but he's very well known in our business, right?
Yeah. His Stansberry had a friend by the name of Ray Rivera, right?
That's correct.
And he worked at Stansberry Research, and Ray Rivera jumped or was pushed off the Belvedere Hotel roof.
Or his body was just placed in this weird location. Nobody's quite sure exactly how, but he did end. He was working. Here's the key part. He was at home. He got a phone call from the Stansberry offices to his cell phone. He raced out, disappeared, and his body was found about a week later. That's what you can say with certainty.
Yep. And past
After that, murky.
Past that, no idea.
You can say one other thing, because the police detective said Stansberry told all the employees gag orders in place. You don't talk to the cops. You don't talk to the media. Nobody else, which they now deny, by the way.
Wow.
Pretty weird.
I know. The story, though, because it's on Netflix, I just have this sneaking notion that it's gonna get wings. It's gonna kind of take flight, and we're gonna see a lot more about this. So, but look, I want to talk.
What about the money part?
That's what I want to talk about.
Oh, okay.
I want to talk about this guy who's annoyed me since I think the first time he came up on my radar was in like 93, 94, somewhere around there. Porter Stansberry, actually his name is Frank Porter Stansberry.
Yeah. Well.
He worked out of college. I think he went to college. I'm just guessing. I don't even know that. But he worked in the mailroom of a company called Agora Publications. Agora Publications publishes newsletters, thousands of them. Almost all the really terrible newsletters out there are published by Agora. Well,
these are investment newsletters.
And no, all kinds of newsletters. Life,
other
Betterment,
stuff. Okay.
A lot of money ones, though.
All right. Okay.
Well, apparently, Frank Porter Stansberry wrote a really good, scary letter. The company loved the letters he wrote. And so they promoted him because his letters, he said his first letter that he sent out to the public brought in $1.5 million in subscriptions.
Wow.
So he was the golden boy. Well,
he's out of the mailroom on that one.
So
for sure.
They started and gave him the run of a company called Stansberry Research that is responsible for, get this, 20 investing newsletters. 20.
That means you could be. The good news is you could be wrong with one, and then you could just say, ignore that one and read the other one.
20 of them. Now, I want to talk to you a little bit about not only these newsletters, but his predictions and the lack of veracity. And yet, I want to ask you, why do you keep buying this stuff?
Tom and Don are talking real money.
We don't believe in seat-of-your-pants investing. We believe investing should be based on solid science, on academic research. That's why on July 29th, we'll be hosting a brand new class, The New Science of Real Investing, at 8 a.m. via Zoom. Get your tickets right now at talkingrealmoney.com. Just click on the new events button or the events button and reserve your place. Go to talkingrealmoney.com and make sure you're there to learn the science of real investing in our next online Zoom class. Go to talkingrealmoney.com, click on the events button.
For your real life and real future, Tom and Don are talking real money.
If you subscribe to an investing newsletter, we'd really like to know what and why. 855-935-TALK is our number, 855-935-8255. We're talking about the thorn in my financial side, and that is Stansberry Research. They publish 20 different newsletters, from their macro level newsletters like Stansberry's Investment Advisory and Commodity Super Cycles and the like, that are just $199 a year or $1,500 for life.
And Mr. Stansberry back in the news due to the unsolved mystery, apparently that he's involved in somehow. So that's how he's back in the news. Let's put it that way.
Yeah, and if you're a retirement trader, they have a newsletter for you. It's only $4,000 a year. $4,000 a year. Oh, they got $5,000 a year newsletters. They got all kinds of stuff. But let me just tell you a little bit about Porter Stansberry. Porter Stansberry, back in the early 2000s, was charged with fraud by the Securities and Exchange Commission. He tried to use a First Amendment argument, but it turns out that what he was doing was, the judge said, outright fraud. You defrauded people. He lied. He said he had somebody inside this company. He did everything under assumed names. He sent out this letter to all of their subscribers saying, we have a stock that's going to double in value, but we won't tell you the name unless you send us $1,000 for the special report. Well, apparently 15,000 people were gullible enough to do it, and the stock did not do what he said it was going to do. And so he got fined by the SEC, and he claims, of course, like everybody who gets in trouble with the SEC, that it was a witch hunt. It was a witch hunt. Shortly after that, he doubles down, he triples down, he quadruples down. He claims in 2008, I never saw any evidence of this. And by the way, Peter Schiff of CNBC couldn't find any evidence of correct calls from this guy either. But he claimed that he predicted the decline of Fannie, Freddie, Lehman Brothers, and all that. Yeah, claimed. I can't find anything that says he did, but I do know that in 2010, he released a video that played for years online. It was
scare video,
an hour and 23 minutes long. And all it was Porter Stansberry reading a script that they put the words up on the screen. And here's what he said.
The U.S. dollar goes down as the world's reserve currency. It's going to have disastrous effects for every American and for nearly every asset in America. You simply must take some simple steps to protect yourself as much as possible. This currency crisis is going to get much, much worse.
Much, much worse, he said.
Now, by the way, do you know the things? You know the things he said to invest in at that point?
Yeah, I do. Gold.
I think one was gold.
The other was
and the
silver.
other one was like
Silver.
Oh, okay. I thought the other one was like foreign real estate or something.
Oh, that too. He said buy real estate overseas because the United States is done. Now, this was in 2010. So, again, he might be right eventually, or he probably won't be, I guess, at this juncture. And if he is right eventually, really, can you say he called it?
No.
You know, if it's 10 years later. And let me tell you, when he said this, gold was at $1,600 an ounce. And
trading today at 1,800,
and silver was at 30, trading today at 18.
Yeah, right.
So those predictions didn't work out. He's been charged with fraud, and yet he still has hundreds of thousands of newsletter subscribers.
And we want to know why. So you gave out the number 855-935-TALK. Call us. Tell us why you, not necessarily to his, but to any investment newsletter, because the only reason you'd give money to an investment newsletter would be to what? Beat the market. Because if you just want to be the market, you just buy index funds. You don't have to pay them. What'd you say? The one was $4,000?
No, there was one. They have one that is, what's it called? It's called Stansberry Venture. No, that wasn't the one. There's so many of them. 10 stock trader. Oh, no, it was Venture Technology. Venture Technology is normally $5,500 a year. But for a limited time only, you can get it for $2,500 a year or lifetime for just $5,000.
I think I'll just buy the one share of Amazon now trading at $3,200 a share instead. How about that?
They've got one called Cannabis Capitalist, Crypto Capital, Crypto, $5,000. $5,000. Yeah. Uh-huh.
I think do they have one on lumber now, because that's up like 45% since April 1st too.
Oh, so your backyard is going to be valuable now.
Ooh, I know. Start hacking those trees.
Start hacking those big trees down.
Exactly.
855-935-TALK is our phone number. And Mohammed, you're up. Welcome to Talking Real Money.
Hi, Mohammed.
Good afternoon, sir. How are you doing?
Hello.
We're well, thank you.
Great. Yeah.
Yeah, so I am, you can say, 70 years old, and I give me a package of early retirement, and I did not take it last month, and I'm still working. My question is, I have around 1.2 million in the stocks with the Fidelity. So what do you think? I continue my risk, or I move these monies to maybe just banking account, and set them there. So I'm worried about the stocks, where its direction is going.
Me too. Me too. By the way, I'm always worried about. I'm always worried about stocks in the short term.
Well,
I am.
yeah,
You should be. Right. They're risky. But here's the question, Mohammed. At 70, we don't know really anything about how long until you need the money, and how much of the $1.2 million you need. What income needs to be generated from that to supply you when you do leave your work? Have you run those numbers?
Yes, I'm from the Social Security point of view, I'm qualified for around $4,000 a month. So maybe I need from this money maybe around another $30,000 when I retire a month. A month or something like that.
A month? You need $30,000. Oh, you scared me for a minute.
You had us going.
Yeah, because if you need 30,
I heard the ad. I heard the ad for Jaguar, but that was a quick purchase. Well,
I was going to send you to Stansberry to his newsletters, because that's the only chance you have.
Oh, thank you.
So
Thank you, sir.
no, 30,000 on 1.2 is somewhere around what 2 point something percent.
Yeah, 2.7%.
So, you could, you could do something. So you said, I want to make sure I heard you right, though. You have the 1.2 million all in stocks?
Individual stocks?
Yes.
Okay.
Yes,
Let me bring this to the wonderful world of the middle. You're going to the extremes. You are currently investing at one extreme, which is all stocks, which we think is foolish, sir. Really, for anybody to be in individual stocks, the risks, if you're worried about risk, individual stocks can lose you everything. That's a scary thought. You need to find a balance between the two extremes. You don't go from all stock to all cash. That is a huge mistake. The big mistake that most investors make is that rapid transfer. What you need to understand, one, is your need for risk, and we think we understand that now. You need an income of a little less than 3% a year from your money, which you should be able to accomplish that with a relatively conservative balance of mutual funds, with probably 20 to 30% in stocks and 70 or so percent in high quality bonds. But you need to go take our risk survey, determine where your risk tolerance level is. I'm guessing it's high. And then you need to either do this on your own or sit down with a really good 100% fiduciary advisor. And we can help you find those too at talkingrealmoney.com.
Tom and Don are talking real money.
You've heard that about 99% of all financial advisors are not always required to act in your best interest. You've probably been pitched financial products by all manner of friends and relatives, and the investing you have done is probably a hodgepodge of ill-fitting pieces that are doing little to provide the financial security you need. If you're looking for a 100% pure fiduciary, and we'll put that in writing, low-cost, fee-only advisor who always puts you first, give Vestory a call at 800-386-3004. That's 800-386-3004, or visit us online at Vestory, VESTORY.com.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-TALK is our phone number, 855-935-8255. What you need to do is call us before you do something bad, or call us to find some direction toward the good. And we are big believers in the middle ground. We all should be investing in the middle. We should be investing in an area in which we're comfortable, that will meet our needs, and that doesn't involve high costs or crazy, stupid strategies, or somebody writing a newsletter that claims to be able to predict the bloody future.
And the newsletter business is rife with that. Our friend Mark Hulbert, I think, looked at newsletters studied them for like 30 years. Used to
35 years he gave.
Yeah, a long time. And at the end, he kind of said, I don't know what you really gain by doing all that, right?
Right. He said, quote, most newsletters vastly overstate the probabilities of beating the market over 30 years. Now, this is him tracking them over 30 years. He found one, and he only had one newsletter that had 30 years of history. He had 7 that had a 30-year history. One of those 7 matched the market over 30 years.
Wow. Mm-hmm.
The other 7 lagged far behind, or the other 6, far behind.
And that doesn't include the cost of the newsletter.
Right, and that also does include something that I don't think many of you think about when you get a newsletter. If someone is saying, buy this stock right now, it's undervalued, it's cheap, it's a bargain right now, what happens when that newsletter hits the very first email box of someone who follows it religiously? They're
making the buy. Right,
they're going to buy.
Ooh.
They're going to buy. Now, what if you opened that email the next day? Bet the stock's already moved away from you.
Yeah.
Because these things happen so quickly. The Value Line survey has been around for many years, and they used to claim that they were one of the only newsletters that beat the market. And in fact, their newsletter beat the market, but their mutual fund underperformed the market because their mutual fund could not trade the stocks until the newsletter was in the hands of subscribers. So they bought after the newsletter, with its accurate prediction, landed in the hands of its subscribers.
Yeah. And I guess the newsletter business at its core, my concern is what you just mentioned about Mr. Stansberry with his case with the SEC. They always hide behind the First Amendment. They sort of shirk their responsibility. Well, we wrote that and it's okay, and we can write whatever we like. Mm-hmm. But that doesn't really aid the people reading it and responding it to.
And what's interesting about Stansberry's case is the fact that I believe if it's not the first time they've successfully done it, it was one of the very few times that the SEC has successfully charged a newsletter with fraud, because his was so blasted blatant. Most of the time, they can get away with murder because they can say almost anything they want because of the First Amendment, and I'm glad for that. Okay, I'm glad for that. I don't think investing newsletters should be regulated, but I do think you need to be educated. This is the problem. You are stubbornly resistant. You are to facts. You are stubbornly resistant to facts.
Are you saying that to me?
I'm saying that to America. America.
Okay, very good.
I'm saying that to all of you out there listening to the sound of my voice.
Well, okay, but again, at the core of all this, a newsletter needs to sell subscriptions. How do they sell subscriptions? They do something like Stansberry did, The End of America. Mm-hmm. They make it dramatic, right? You better stand up and pay attention to this. Or I'm going to show you how to double your money by owning one stock.
Which is the other thing Stansberry did. He did both extremes.
He did. Yeah.
The world is coming to an end. You got to buy gold. Oh, wait, that wasn't right. Okay, we're going to make you a lot of money in one stock. Oh, wait, that wasn't right either. And yet, Porter Stansberry is incredibly wealthy thanks to you. You made him that way. You actually encourage the lying because you keep falling for it. 855-935-TALK. Give us a call.
Tom and Don are talking real money.
Did you know I wrote a book? Yeah, about 10 years ago, I wrote a book about investing. Financial Physics, with an F, How Money and Investing Really Work. It's a short read. It's a really easy read because, well, as you know, investing is way too easy to be this complicated. And it's been on sale for a long time at Amazon. I updated it in 2018 to a new version. But if you don't want to buy it, you can go buy it at Amazon. It's $10. But if you don't want to buy it, if you want it free, well, you can get it free two ways. One, you can get a PDF copy by going to talkingrealmoney.com/free. talkingrealmoney.com/free. If you don't put in the /free, you can't find it. The other way is if you have an iDevice, like an iPhone or an iPad or a Mac, you can go get an interactive version of the book, a special edition that I made that's actually interactive, that's got videos and motion and things going on. And that's also free. Just look for Financial Physics, FYSICS, in the Apple Bookstore or Apple Books or whatever they call it now. Or go to talkingrealmoney.com/free, talkingrealmoney.com/free. And I guarantee you'll enjoy the PDF or the iBook or your money back. Check it out, talkingrealmoney.com/free.
Reality radio for a really great future. We're talking real money.
855-935-8255. That's our phone number. We've got lines open for you right now. If you're a newsletter subscriber, let's talk about your newsletter and why you get it. Or
if you're a newsletter writer, call us.
And why you do it. Well, we know, though.
Yeah, sure.
I found an article from 2019 in Barron's by Mark Hulbert, coincidentally. And he says, quote, "I believe that when an analyst makes a prediction, he is less interested in being right than he is in gaining notoriety and new subscribers. Being outrageous and an outlier is therefore a virtue." And he goes on to say that if you wanted to be accurate, a good newsletter writer would say, hey, the market's going to go up about 8% per year, give or take. And you just keep saying that all the time, and you're going to have an incredible track record. But nobody's going to pay any. Nobody's going to pay any attention.
Right. You won't be number one in his newsletter rankings either, right? Remember, he also used to point out the fact that, generally speaking, the newsletter that had the best performance one year would go to the bottom of the heap the next, because they did exactly what we just talked about. They picked the hot stock that turned out to be great, and then the next year, that performance is gone.
And again, I don't mean to sound whiny, but when I go to the podcast charts on Apple Podcasts and go to the investing podcast, I see the interest is highest in those podcasts that promise you something miraculous, that are outrageous, that, promise that you can make 18% per year in real estate, or you can trade options. Those podcasts do very, very well among listeners. They get people to listen because they're extreme. They're extreme. Now, of course, the number one podcast is Dave Ramsey, and that's just because I don't know. He's very famous. But things like Mad Money with Jim Cramer, just outrageous. Bigger Pockets Real Estate, they say things that are outrageous. Rich Dad Radio Show, outrageous. You know, we've got to stop looking for the outrageous and start looking for the reasonable. It's going to carry you a lot farther into a future, the kind of future you deserve.
And give the phone number.
Yeah, 855-935-TALK, 855-935-8255. Free, it's easy,
call
too.
us.
Call us.
Yeah, you can call us about anything money related.
Oh, yeah, here's the Option Alpha weekly podcast. There you go. Trend following. There's nothing like that.
Simple. But, okay, you think those are outrageous. What about our friend Bill Ackman, who, I mean, talk about...
Is he really your friend?
Well, no, he's.
I hardly know the guy. Okay, I don't know him at all.
Either. You might know the name though, because he took on Herbalife, right?
Oh gosh, yes, and he lost
that whole thing, and he lost.
He shorted Herbalife. Yeah, he's a crazy wild man.
The other one, he is a wild man, and that's fine. Here's the way I look at it: if you're willing, if you've got a lot of money, as a lot of the people that invested with him do, and you want to give them all that money and you lose it, well, I guess you're going to be okay because you have other money,
right? It's your prerogative.
I struggle when he is going to do a initial public offering where the offering is you give your money to Bill and he wakes up tomorrow and says, hey, here's what I think makes a lot of sense and I'm going to go invest in it or I'm going to short this. I think that's kind of crazy.
And what's funny is that a couple of weeks ago, we had a caller who called in to talk about just this kind of fund. It's called a blank check fund. In essence, investors write them a blank check. They say, hey, here, take my money. You go out and buy a company, or sometimes they'll buy a couple of companies that kind of go together, and then they'll change the name of the blank check fund to the name of that company, like BurgerFi or whatever it might be. It's a way for a company to go public without the high expense of going public.
They have kind of the shell corporation,
the shell corporation that swallows up these other companies. And while it can be very lucrative, okay? We
had the call a couple weeks ago from the guy that said he made a lot of money.
They can be very lucrative, but you have to put that in perspective. And this is where we, as human beings and investors, fall down on the job. We do not take into account that crazy little thing called
love?
Risk.
Oh, risk. Okay.
The risk in these is incredibly high. You have a risk of 100% loss. You buy the Vanguard Total World Stock Index Fund? Come on. How in the world could you lose everything?
Comet.
Don't
we have a new one going around?
Yeah, but it's way out there. Asteroid hit the Earth. Okay, big asteroid. Dinosaur killer, Zombie apocalypse. World War III.
Yep.
Maybe.
Mm-hmm.
That's about it.
Okay. Other than that, you're probably okay.
Yeah. 855-935-8255. We'll get right back to it right after we take a break for some important stuff that makes money.
Don are talking real money.
We don't believe in seat-of-your-pants investing. We believe investing should be based on solid science, on academic research. That's why on July 29th, we'll be hosting a brand new class, The New Science of Real Investing, at 8 a.m. via Zoom. Get your tickets right now at talkingrealmoney.com. Just click on the new events button or the events button and reserve your place. Go to talkingrealmoney.com and make sure you're there to learn the science of real investing in our next online Zoom class. Go to talkingrealmoney.com, click on the events button.
For your real life and real future, Tom and Don are talking real money.
Again, here is a phone number that you need to know, and you can call it 24 hours a day. You can call during the show, on Saturdays, or any other time, 855-935-TALK, 855-935-8255. And Tom, you're up next. Welcome to Talking Real Money.
Hello,
hi, Tom.
Are we on there?
We are.
We are, sir.
I see. Well,
Yes,
I
sir.
noticed there's about a 3-second lag time between what the
Yeah, you need to
person
turn your
says.
radio off because that'll be confusing. That's in case somebody says a bad word. We can cut you off.
Oh, well, I don't intend to use any profanity.
I didn't think you would.
You two are money experts. Is that true?
Depends on
Something
your
like
definition
that.
of
Yeah,
expert.
I guess so. Yeah, can we predict the future?
You are?
No.
Oh, good. Then I want to address an issue of a very important money matter that's looming over you. If you have the courage to address it, I would like for you to comment on what the potential effects could be regarding a 50% reduction in your police department's budget.
Well, I don't think about it in terms of investments. I don't think it would affect most people's investment portfolios. And that's a political topic that we try to avoid. We really do. We work very hard.
Pretty assiduously
diligently.
try to, yeah.
We
to
try
avoid
not to bring our politics into the show, and because we realize that in talk radio, generally, if you want to talk about politics,
plenty of spots.
you got lots of places to go. There's just a ton of them. You can go over to the Tacoma sister station, KVI. All day long, weekdays, you can talk politics and police department budget cuts and all that stuff. I, by the way, live in Florida, and my police department, their budget's only being cut because tax revenue's down because of COVID.
Well, I was just going to get to that. I mean, I do think one of the things that comes out of the crisis, the pandemic, is municipal governments will have less money.
Well, ours already does, yeah. And
right, what that all means, I think that the jury's still out, but. Yeah, to get into defunding the police.
That is not a topic we're going to cover. But thank you, though, for the call. 855-935-TALK is our phone number. And Catherine, you're next. Welcome to Talking Real Money.
Hopefully
Hi,
this is
Tom and
easier.
Don. The question that I have is regarding Vanguard Small Cap Value Fund. Can you tell me why
Yes,
it's
ma'am.
not doing very well?
It's not just not doing very well. It's down probably 25% for the year.
Yeah, so I'd like to
Right?
know why.
Yep.
Why
Yeah.
is it that bad?
Because that segment of the market is doing badly. One,
let's step back
value
and-
stocks
yeah.
aren't doing all that well.
Yeah, even big value stocks are doing very poorly for the year. Let's step back, though. This has been an area of the stock market that has been very prolific. If you go back to the about mid-1920s, it's outproduced big companies like Boeing and Amazon by more than 2% a year in the long haul. Mm-hmm. But to get paid that premium, to make that additional money, Catherine, you've had to deal with periods like this when it looks bad for small companies, right? If you're not a well-funded big company, or you can't go out and borrow $600 billion or whatever it is, you may go out of business in a situation where companies are facing 80, 90% reductions in income. So they're riskier firms. Those riskier firms over the long haul have created greater returns. But in periods like this, it looks tough.
Well, and a couple of other things, too. One, there are segments of the market that in any given decade occasionally perform horribly, even though they have a record of doing incredibly well. Let me give you a terrific example. The Standard & Poor's 500 has, on average, since its inception, returned about 10% per year. On average, every year, like clockwork. Except it's not like clockwork, because from 2000 until 2010, it was down an average of 1% per year over that entire period. This is why we believe you own massive diversification. You own small cap value because as Tom said, over 80, 90 years, small cap value has in almost every 10-year period, and the key word is almost, beaten growth stocks.
And here's the real struggle this year, because we've done it. We were selling bonds, right? I just looked at our intermediate term government bond fund we use. It's still almost up 10% year to date. You should technically be selling those. And here's the painful part, Catherine, and buying the thing you just said. Why does it stink so bad? Because that's what you got to do if you have a disciplined approach to rebalancing your portfolio, selling high, buying low, closing your sensory perception to the fact that, yeah, from time to time, those kind of stocks, by the way, Dom correctly pointed out, all types of stocks have periods of underperformance. We just don't know when that's coming. We don't know how long it's going to last. But over long periods of time, that asset class you mentioned, U.S. small cap value, has been extremely productive. Is that helpful?
Yes, it is. I appreciate it. Thanks.
Thank you. And let me just give you a number, by the way, Catherine. This might help. Since World War II, since 1945, small cap value stocks through June of 2020 have returned an average of 13.5% per year.
Is that VE day or VJ day? Which one?
I went from VE day.
Okay, just checking.
So I went from May.
Historical record. Yeah, May of 45. Okay.
Now wait, let me go to September. Same number. Same number.
Okay, well, it's shocking.
It's
so
the
you can
same.
see, it's been, all joking aside, it's been a very productive asset class. I mean, we use asset class, group of stocks.
But here's the thing. This gets me really riled. We, as investors, look at a 13% number and we'll like that. We go, oh, it made 13% per
Check
year.
the box.
I'm going to make 13% a year.
No.
You're
not.
No. You're not. You're going to have
guarantee.
You're going to have a period where you lose.
Yeah.
That I guarantee too. I don't know how long the losing period, how long it will last. But I do know based on statistics that if you're really, really well diversified, stocks and bonds, growth and value, U.S. and international, all of those things, small and large, you're really, really, really well diversified. You got like a 50-50 or a 60-40 or a 40-60 portfolio that over 5 years, your losses have been negligible.
Well, I can point out one other thing about that particular group of stocks you mentioned, U.S. small value. Nobody knows when you're going to get paid that premium, the additional return over large, right? Nobody knows when that's coming. And here's the other part. Oftentimes it can be a very short period of time. So if you trade out of it today, you might be missing the big run that comes in August. We don't know. So you have to have proper exposure, right? Your assets exposed to those type of stocks all the time. And she's right. Sometimes it's painful to watch because it's difficult year. By the way, for U.S. large value as well, is that a very difficult year. I think it's down in the 22% range as well for the year. So this has not been an easy time for value investors.
And by the way, that same decade I was talking about for the S&P 500, where the S&P 500 lost money over 10 years, the small cap value index over that same period made 11% per year, while the S&P 500 lost 1% per year. So having small cap value back then bailed you out of what would have been a very bad decade. Diversification. It's the key. 855-935-TALK. Call.
Tom and Don are talking real money.
If you're sick of your self-interested financial advisor and are looking for a 100% fiduciary low-fee investment advisor, call my firm Vestory at 800-386-3004 or visit us at vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
You know, Tom and I just recently scheduled a new class that I'm working on right now. It's called The New Science of Retirement Investing. Lots of new information that we've never shared before. And we really haven't promoted it yet. And I went and looked at the class and I went, holy cow, 30 people are already signed up. So, wow, 30 people are already signed up for The New Science of Retirement Investing, which is a Zoom class taking place on Wednesday, July 29th, 8 a.m. Pacific time, 11 a.m. Eastern. And it is wonderfully free. And we have a great Q&A usually afterwards. Go sign up right now at talkingrealmoney.com, talkingrealmoney.com.
We hope you realize advise that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.